Alright, so this is October 20th, 2020. Basically, today, um, what I want to do is I want to cover a couple of issues that I've seen with some traders. Let me clean up some of my screens here. Give me 2 seconds. So basically, let's look at the market structure of the last couple days, okay? Hopefully this is clear enough. So here's my ES profile, okay? Um, what I'm seeing here, first of all, in the last couple of days, okay, again, this is basically just to understand what's going on with the auction of the market, and just to see how volatility picks up, when certain things occur. So here we are in ES. Here, what we've been getting basically is a market where you know we had a drop down since October 12th, and since that drop down we had 2 days where value shifted higher. Okay, so that's one concept of market profile that I use differently compared to the regular market profile guys. Here's value here, and value here. So we had a shift of value. Okay, the first time this happens, okay, it basically brings in new participants. So we've been going down. Okay, we had these single prints these couple of days here. So we had a shift of value here. When you get a shift of value, this does not mean the market's going to just start shifting higher or consolidate for a move higher. Not really. Shift of value just means added volatility. We're going to have more volatility coming in. That's what it means. Okay, so you see here, value, we had a trend day up. The one time framing in this day ended on this green candle. So you see the one time framing, I use that on the 30-minute intraday and also on the daily charts. Okay, so the one time framing here, the single prints here. So again, number one time framing. Number two, single prints give me areas of biases. If market could hold above this area, we might gradually rotate higher. Market rejects that area, closes below it, comes in with a new single print here. So already the, the action here is telling me that this shift of value may have just been short squeezed here, short squeezed here. Okay, so shift of value, more volatility coming in. In the overnight, what we have, the market opened here, ended lower. Overnight is a counter auction to what happened here, right? So the trend was here, the market ended lower. The overnight was a counter auction. So you go and pick your levels from the overnight, which is around here. That's where the one time framing ended. Okay, so if I was to play around with that here a bit, okay, so that overnight session, basically the one time framing ended around, look, it's an approximate level here. So here's our overnight. Remember that day I showed you the overnight. First thing, M period ends with a spike down. So that's another nuance that I like to use with market profile. Okay, you want to just jot out the M high and the M low as basically your balance area for the overnight. Okay, above M you want to be a buyer, below M you want to be a seller. Okay, that's the kind of concept that I use for M period. Quickly, the one time framing here basically ended. I'm just going to play around with these here. The one time framing ended at this line here. Okay, so if I was to draw that, let's just draw it here quickly. That's my one time framing. Okay, so for me it's like a quick way to monitor the auction of the market. The market's been going up, one time framing ended at that high there. I could also argue that the one time framing ended here. Okay, what happens in the overnight is sometimes you'll get, you know, the first Asian, the open with the Asian market, the first 2 3 hours generally low volatility, low volume, and then once the Asian session opens up, you'll get some spikes of volume there. So that's like one area to focus, and then you'll get the European session a bit later in the overnight. So I'm in the Eastern time zone. So you know, I know that generally if the market does this, it'll give me one or two areas if it's trending up or down. You know, where the one time framing ends. So you have that area and also this area. So the one thing you're looking at is we have this 3491 that is coming from our daily one time framing that started auctioning lower already on a quick scale. That's an area that the market needs to kind of build time above it. Okay, so here, that's the one time framing, as you can see here. So we closed below that, and then we closed below on this level recently. So you see the 3491, the 3470. These are just psychological levels. And if we go back here, we have this area. So we have three prices that bulls basically need to overcome to shoot to target higher prices to go get the all-time highs. You get it? So if we can't get over those and we can't close above those, basically it's just bringing added pressure to the market to the downside. And then the quick thing I noticed here in the overnight is we're getting to close. We can get above the 3491. Yes, so we did get a bit above it a bit there, you know. But the most important thing is this one timing framing here intraday, because now I want to know what's going on here in the overnight intra, you know, in my 30-minute candles. So first of all, market opens below it, shoots high, misses that 3491. So already this open was very, very tricky because you know that either we're going to fail here or we're going to get huge buying and just continue higher. So that was a very tricky open. However, I generally wait this off and I just want to see how the market reacts to this area. So one thing, it rejected it. So since it rejected it, see we went lower, and then this was basically the low of um, sorry, this was basically the new low. 3470 basically was the new low where the one time framing ended again, because that was the overnight low. You see that overnight low. So the market is stuck between 3491 and 3470. Okay, and we do auction lower, gives us one two single prints. Okay, so that already tells me that there's emotional trading here. Okay, the selling is really strong, or the momentum to the downside is pretty strong, and already we can't get above this, we can't get above the previous day's low. So that's 2 days in a row where the one time framing has broken, right? So now what happens is we end all the way down to 3417. We even overshoot it with an M period that goes lower. So all you do for the overnight session now and the next day is you take the high of M and the low of M. You're like, okay, that's my balance area for the overnight. As you can see, overnight we bounced off M high once, twice, three times. Again, it's always an approximate. And then today the market opened, shot higher, okay, and we in the D period we came again to that M period high, and we've held it once again. So it's already telling you that this M period high is very important, okay. And I think we had some kind of news today, so we broke once to the single print here, the single print there. So these are like key inflection points to see how the market basically reacts at these levels, right? And then we hit 3470 to the tick and bounced lower again. So let's get back to our daily. Here's our daily. This is the daily profile, sorry, the daily candles. So as you can see, the 34.17, we bounced off of it. Okay, we bounced off of 34.70. So my quick expectation of the next couple of days. Okay, so nothing complicated. Once again, I'm here to tell myself market has resistance here, psychological resistance here. We have some kind of a low here. Very good odds that this inside day we trade to the high and to the low. It's an inside day. So, the context here, it's not about candles. It's not about candlestick pattern or anything here. It's about where did the sellers take control. So that's one time framing up here, which basically started here. And then basically uh, the one time framing up never really ended. Okay. What's important here is that one time framing is about, since we're going up, it's about the low of each candle, right? So we never close below this, we never close below this, we never here did we close below it? Yes, we actually did close below it, right? Did we? Yeah, we did. So the one time framing up ended here. Okay, so that's an area, I don't know why, but I don't have it marked. I can go back and mark it down right away. So let's do that now. So I probably just missed it, or maybe I erased it by error or I forgot to save it. So the one-time framing, basically right here, up ended there, 34.40, 33.44, right? You see, the one-time framing had also going down here had also ended at that same level here. So I have that green line here, 33.64. So the market was stuck between 33.64 and 33.44 for some time. Okay, this is how you could basically give yourself a good bias coming from your midterm, which is basically your long term. Your long term here. It's the daily. No need to get to the weeklies, to the monthlies. We're day traders. We want to know what's happening from this day compared to this day. We're here today, what happened yesterday, and what's most likely going to happen in the next day or the next couple of days. So all I have here is psychological resistance here, right? Knowing that we have an inside day. Inside day, the rule is generally that we will most likely come and touch the high of this day, this day, sorry, and we will most likely trade to the low of this day. And now, this is where you could, use a bit of correlations and also smaller time frames to give you some nuances. Okay, so I'm going to show you now the the 5 minute chart, because the 5 minute chart, what it does is it gives you a good context of what's going on in the market. Okay, so let's get to today's action. So here, this is the overnight that starts. The overnight starts here, and the overnight for tomorrow, for today, will be here. So let me just draw this, okay? Draw your attention to some little key nuances. So today, the market basically did this, and ended lower. It basically opened around here and ended lower. Okay, let's look at yesterday's auction. We did this yesterday, right? And in the overnight, what we basically did is we had this high, and this high. These highs were so close to each other that, and these lows were so close to each other that, generally speaking, the market needs to clear liquidity above these highs, clear liquidity above these lows, okay, and kind of define the price range where you expect yourself to trade in. So I'm just gonna have to play around with the coloring here. So this was the price range that I was already expecting for today. Okay, the gray areas. What happened here is the market came to that low and also traded a bit above that same area. And then once we got this big candle above it and retest, that clearly told us that it wanted to go higher. Okay, now since it went higher, okay, and then I also have a way to define like areas where it wants to reject. Here we are again, 3470. Remember that? That's our daily one-time framing coming from the daily. So it rejects that. What does it leave? It leaves a pocket of liquidity here that's so evident that generally speaking, the market could easily go get this liquidity that's sitting right here. We haven't completely gotten through this liquidity here. I mean, double tops and double bottoms, the market loves to go get them. It does this, does that. Go get the liquidity and then either build time here and continue, or again, rotate back into a certain range. These are the kind of concepts that I look for on the 5 minute, because the 5 minute generally gives us a great area to bias, uh, you know, the short-term action, and also the fact that um, a lot of retail traders are purely trading off 5 minute candles, and I mean, in my trading, I use the footprint to give me areas to do business. I want to see how the buying is. I use the pullback delta, and then I have previous areas where sellers and buyers had reacted. I want to see what kind of imbalances occurred. I mean, there's this huge area of imbalance that occurred here today. Okay, let me show you here. You see this whole area of imbalance where the market just flushed through it, and look, we just came back and we basically just filled it back. So I like that. I want to see what happens there. And what happened is very clear. Sellers are just controlling this auction basically. So I just put myself here notes saying that previous area where sellers were in charge, and then I also play around with the volume profile areas here to define that this area is going to be important going forward, and that's pretty much it. you know Trading is not really complicated. It's just purely reading what others might see, and generally speaking, um, if you're kind of good with tape, because don't forget I use Jigsaw for my trading. I want to see how the buyers and sellers are acting at certain areas, and then you know I've been playing around with ES and also with sorry, let me just close off this. I've been playing around with ES and also with NQ recently, and uh, the market is basically given great areas to do business. Okay, and the tape on Jigsaw is what I prefer because I want to know how the selling is. Is it constant? Is it you know uh, your eye kind of gets used to these areas to play with. I know a lot of guys who basically trade off candlesticks, formations. Um, there are various ways you can use the information here. Um, what kind of tape do we have? That's another thing I do. What kind of tape basically means on a 10-second chart, every candle is 10 seconds. What kind of volume is being built on each swing? And then from there, you're able to bias an area where, buyers need control above it and sellers need control below this. It's another concept that I basically teach and what I look for during the intraday. But I mean, generally speaking, one-time framing, okay? So it's one-time framing on 30-minute candles and also on the daily, and then looking for areas to do business on my footprint charts, right? Uh, when it comes to market profile, let's just jot that down. All I have to tell you guys is single prints, do we have any? How many do we have? That's an important nuance. 2 or 3 per day, that could happen. Uh, one time framing on the 30 minutes candles for the intraday auction, and then M period. What is M period doing? Okay. Also, um, that, and then look for I look for volume profile. I want to see what kind of volume is building. Volume profile, there's a lot of nuances, a lot of BS out there that people are, looking at, and how they use VPOC and how they use, the high volume nodes and all that. And then just to not forget, so that's fingerprints, one time framing, M period. And then the fourth nuance for market profile is basically TPOC. It's time point of control. I like to see if we could spend more than 8 wide in a time in a in a certain day. So 8 wide would be a good example of that would basically be here we are. I think we had 8 wide today. Yeah. So 1, 2, 3, 4, 5, 6, 7, 8 wide. Here we are. 34.41 ish. So that I know that the market loves to rotate around that level, especially when it's 8 wide and plus, 8 and more basically. And if you look at this day, we had 1, 2, 3, 4, 5 or 6. This is not very important for me as an area to look at, because the market likes to rotate to T-box that are 8 wide. There's a lot of misconceptions or stuff that don't work with the market profile, and everyone's trying to understand or use a market profile with these levels or these nuances. And believe me, you have to test it, and not everything I see out there from the main, the market profile theorists and the fathers of market profile. A lot of that stuff don't work. Um, if you're just basing your trades off this here, okay? I mean, again, I'm not here to. Just this is not enough. Like, this is market profile. Here we are. One time framing ended right here. So you're like, okay, one time framing ended here. Let's see if buyers could take this above us. How would you execute a short here? That's where you need footprint. That's where you need to see the inside of each candle here. Um, that's why I have my single prints, extended like this, because I know that these are the important nuances, And anytime you have so many single prints like this, okay, generally speaking, the market should not even come back to test these areas. Uh, and the thing with this kind of market is, when you have this nice momentum up and you have 1, 2, 3, 4 single prints, this whole area should act as like huge support. It'll be very hard to get through this area. We'll have a lot of chop here because there's a lot of imbalances here. There's a lot of, strength behind this market. But normally, when we get this kind of market, you should actually expect the market to continue higher. That's number one. If you can't, then the second thing is most likely the market's going to balance. If you have a balanced overnight, let me just leave you with this here. When you have a balanced overnight, okay, what's your balance? What's your how do you basically define what kind of trend or what kind of day you're gonna do or we're gonna have? How would you even look to have a bias here? Because what's the main what's the main theory out there on market profile? You know, it's about, um, here's our value area low and our value area high. We buy here, we sell here. Believe me, that simple nuance does not make it. That does not cut it. I mean, it's not consistent enough. The open was right in value, you know, balanced overnight. What do? Generally speaking, I'll give you one little idea here. This kind of session, up, balanced overnight, first 30 minutes, you wait it out. There's nothing that's telling you how and where to trade. You need to wait the first 30 minutes. This is the only clue with an overnight that's balanced like this. Balanced overnight, you wait out the first 30 minutes. You wait. So again, in my private coaching, I explain all these in much more depth. Um, I needed to do this video quickly because I wanted to give you guys some more information, and then um, you know, I'm getting a lot of traders who need to understand how to define areas and all that, and I think I'm giving you a bit of more information here. The way Nasdaq, how I trade Nasdaq, how I trade ES, there are very good nuances between both of them, and I explain all of this in my private coaching. So once again, don't hesitate to contact me through Twitter. I'll leave all my information here on YouTube just for you guys to be able to, you know, contact me there. Um, and believe me, all the recent feedback I've been getting with a lot of traders is that, they're not consistent. They don't have a process or a way to look at the market on a daily perspective, on a daily level. So I'm willing to help you guys out. Again, these are quick ways to give you some, you know, bias and to give you like the information on, you know, quick, quick level, because nothing is perfect in trading, and sometimes you'll take trades that 90% of the time it works out, and that 10% of the time that didn't work out. So you need to basically be a bit more you relaxed and have a process and know where you have an edge and when you don't have an edge. Well, you either wait it out or you wait for the market to give you that information. So I'm expecting you know I'm expecting a lot of traders to contact me after this video, and hopefully you guys could appreciate the coaching that I give. The value is really good. I mean, in 2 hours, I'm able to cover all my trading and what I look for and how I trade. And then, you basically have to go and look at these nuances, look at how you could incorporate all of this into your trading in your style and also your time. I mean, if you're working, I don't know, all day and you can't stare at screens and all that. I mean, it's not. These markets are not made for people to basically, just buy here and sell there. The market is a bit more complex than that now, and I think that as traders, um, we need to acknowledge the fact that sometimes we might have to sit it out and kind of let the market do its thing and wait for better setups or be more patient. And in the most recent coaching I've had, this is the issue. A lot of traders are like, oh man, I don't know what I did today, I just did this and did that. And sometimes it's like a quick note here, it's about like, the market's been doing this, right? Yeah, I've been scaling into shorts. I'm like, what the hell? Why are you doing that? The market's got great momentum. You most likely shouldn't even try to trade against this. And then, you know, and what happens is, in these kind of days, you have boom, 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 right? And then you have like a single print here, a single print there, and then you have another single print here. This is the kind of day where like, man, where did the one-time framing end? The one-time framing ended here, and then okay, well, sellers can't control below this, so look to buy these dips, right? Look for clues to give you areas to buy the dips, unless we really get to a point where the market just collapses once, twice, three times, and then does this. That's another scenario. But generally, when we have all these single prints, one there, two there, three there, the high odds is you're most likely going to need to look to buy dips instead of trying to sell these highs, because the easy trade is to buy the dips, right? So these are little clues that sometimes I discuss with traders, and sometimes it's like, well, you guys are just being too hasty and you think you have an edge in trading just because the market's overbought or it's totally emotional and it's just going up. It's been 5 days it's been going up, or 5 days it's been going down. At some point we need to buy a dip or buy the low or buy the high or sell the highs. uh, you guys need to develop a process here, and I think um, the nuances that I go over when I do coaching, it will definitely help. So we'll keep in touch. Once again, I appreciate having the the feedback through Twitter and emails that I'm getting from a lot of you guys. So I really appreciate that, and hope we could basically build a nice community here, and basically help each other out, and kind of tweet my ideas, what I'm looking for, and what setups are most likely going to happen. So we'll keep in touch, and feel free to contact me. Have a nice day.